Across the country right now, HOA and condo communities are facing problems that feel like they've come up out of the blue. There's a massive crisis in HOA and condos as a result of years of deferred maintenance leading to rising repair costs, special assessments. Roofs failing, concrete cracking, balconies closing, emergency repairs, large special assessments that no one saw coming. But here's the important thing to understand right up front. This is not just a wave of bad board members. It's not isolated mismanagement. And it's certainly not in one state or any one type of climate. What we're seeing is a national structural issue decades in the making that's just finally becoming visible. If you're a volunteer board member watching this, you might feel like you're behind on something, but you're standing at the same point thousands of communities across the country are standing at right now. This video is here to help you understand what's happening, why it's happening, and most importantly, how boards can regain control before small problems become catastrophic ones. My name is Braun and I'm the founder of Solume, but we'll talk more about that later. Before we go any further, let me be very clear about what this video is not. This is not about blaming past boards, it's not about shaming communities, and it's not about fear-based decision making. Many boards simply didn't know that deferred maintenance would lead to major problems and special assessments. Of course, we have hindsight now, but most volunteer boards weren't given the information in the past, so they probably didn't even know what to look out for. Or worse, they trusted their management company, which may or may not have had their eyes on things. Buildings age whether boards want them to or not. And deferred decisions don't disappear, they compound. The real issue we're facing isn't deterioration itself, it's the lack of visibility into when things will fail, how expensive they'll be, and what delaying them actually costs. Once you can see the future clearly, the panic starts to go away. A big part of this comes down to timing. Many HOA and condo communities across the country were built in the 70s, 80s, and 90s. Those buildings are now reaching the same stage of life all at once. Roofs that were designed to last a couple of decades are now expiring. Plumbing systems are aging. Elevators are reaching the end of life. Balconies, garages, and structural components are under clear stress. This isn't one system failing, it's many systems aging together. And then you add the climate, humidity, extreme sun exposure, and shifting soil all play a role. In Florida, for example, humidity, salt air, and concrete corrosion accelerate aging. In California, you have earthquakes and fires and hillside movement or mudslides that create ongoing structural risk. In places like Colorado, the freeze-thaw cycles and shifting soil quietly stress foundations year after year. Different climates, same outcome. Accelerated aging. Most boards don't delay maintenance because they don't care. They delay because they're trying to protect homeowners. They're trying to keep them happy. They want to keep dues affordable. They want to avoid backlash. They're working from incomplete or outdated reserve studies. Or they simply don't have the tools that show them what happens if nothing is done. But here's the hard truth. Small problems rarely stay small. Deferred maintenance doesn't just pause the clock as much as we would hope it does. In reality, it speeds it up. Problems in buildings compound. Delay introduces more and more failures. And in the worst cases, delay becomes more than financial issues. It becomes a safety issue, and we've all seen the crazy headlines about this. The Surfside condo collapse in Florida, the balcony collapse in Berkeley, California. These were not overnight failures. They were the end result of years of deferred maintenance, misunderstood risks, and structural degradation that went unaddressed. That progression is hard to look at, but it's important to understand. Delayed maintenance can lead to structural failure, and structural failure leads to liability, and in the worst case, it leads to loss of life. Preventative maintenance can be expensive, but delayed maintenance is always more expensive. And a failure is by far the most expensive, financially, legally, and sometimes, unfortunately, in human lives. So when reserve planning breaks down, special assessments usually follow. A special assessment is, that one-time charge that's given to owners outside of normal dues used to cover major expenses the reserve fund can't handle. For example, instead of gradually funding a roof replacement over many years, owners may suddenly be asked to come up with $10,000 or $20,000 when the roof finally fails. It becomes an emergency. Special assessments are legal, they're common, and sometimes they are unavoidable. But they're almost always a symptom of underfunded reserves, deferred maintenance, and decisions made without a clear long-term plan, not the problem itself. Across the country, boards are facing assessments of $10,000, $20,000, even $30,000 per unit. For many homeowners, especially those on fixed income, that's devastating. Some are forced to sell just to escape the assessment. And those sales often happen at 10, 20, even 30% below market value because buyers factor the special assessment in. And the pressure doesn't just stop there. Banks are scrutinizing reserves more closely. Some lenders are blacklisting underfunded communities. Literally, some people are unable to get loans in specific communities because the community is so underfunded. Insurance carriers are raising deductibles, restricting coverage, or pulling out entirely. And this is where boards need to be especially careful. Listen up, what I'm going to tell you here. Unfortunately, some communities find themselves in a situation where a long-term management company suddenly raises the alarm about an emergency repair and then offers to finance the assessment through an affiliated lending arm. I have personally worked with a community in Atlanta that had been under the same management company for nearly 20 years. 20 years. Suddenly, the board was told about emergency repair totaling nearly $15,000 per unit. Many owners were elderly and many on fixed incomes. And almost immediately, the solution was offered with a loan, with interest of course, right? From the management company's own lending arm. The same organization that had overseen the community for years while the problems quietly accumulated, they then came in with a loan as a solution. When visibility comes too late, someone else gets to define the options, and this is by design. Well, as much as I'd like it to be, a reserve study is not a guarantee, and it certainly is not a one-time document that you can file away. A reserve study is a planning tool. A professional comes in and evaluates everything the community is responsible for. In an HOA, that often means shared amenities like pools, clubhouses, and common buildings, and everything inside of them, such as the roof, the HVAC system, plumbing, and pool equipment. In a condominium, that scope usually includes other shared things like roofs, elevators, structural components, and common plumbing systems. There's a lot of stuff that's included in that. Each of those components is assessed for its current condition and its expected remaining life. For example, a roof that was designed to last 15 or 20 years may realistically only have 2 years left. Once that condition and lifespan are understood, a dollar amount is attached. That same roof might be projected to cost $480,000 to replace in 2 years. A reserve study connects all of these timelines and costs so the board can see what's coming and plan for it instead of being surprised by it. In some states, reserve studies or funding disclosures are legally required. In others, they're not. But regardless of state law, planning for known future expenses is a fiduciary responsibility. Many times, boards might not even know that they've had a reserve study conducted, let alone when it was last updated. Certainly not having a reserve study is a problem, but an equally problematic situation is that many boards don't have a way of actively managing them once they have it conducted. This is why many communities get stuck and where things need to change. The risk isn't just not having a reserve study, and that is a risk, but the risk is also not knowing what to do with it once it's conducted and not being able to see the future clearly. Boards need to know, what does the next 5 to 10 years actually look like? What happens if we delay a project by, say, 2 years? What happens if construction costs spike? What happens if inflation or tariffs suddenly raise material prices? This applies directly to property managers as well. If your community is professionally managed, it's reasonable and responsible to ask questions like, how are we tracking our reserve study? What does our long-term forecast look like? What systems are we using to manage this, not just store it as a PDF or an Excel spreadsheet? At a certain point, spreadsheets and static reports stop being enough. Boards and property managers need a dynamic tool that gives them real control over long-term financial and maintenance planning, something that shows how today's decisions ripple forward over time. Solume exists to give boards control over their financial future, turning a static report into an active planning system that shows consequences before they become catastrophic. Solume allows communities to model different funding scenarios, update assumptions over time, and understand the consequences of today's decisions before they become tomorrow's emergencies. Like I said at the beginning of the video, this isn't about blame. What was done in the past is done. It's about looking forward. It's about awareness. But I get it. Reserve studies and financial forecasting can be intimidating if you don't have a system in place. Unfortunately, doing nothing is still a decision. But informed decisions reduce panic. Planning reduces special assessments, and visibility gives control over your community's financial future. Strong communities aren't the ones without problems, they're the ones that see the problems early and have systems in place to mitigate them. If you're a board member watching this, let me ask you a simple question. How confident are you, how confident are you that you understand what your community will need to spend over the next 5 to 10 years? If the answer is not completely, that doesn't mean you failed. It just means that you're, normal, right? Most people are like that. Most boards get into trouble because problems are easy to minimize or postpone or, just misunderstand, especially without a clear long-term picture to guide calm, rational decisions. So here's the important takeaway from this video. You don't need to guess, you don't need to wait for an emergency, and you don't need to accept special assessments as inevitable. If you don't currently have a reserve study, we can connect you with a provider or help you build one on your own. If you already have a reserve study, the next step isn't just another document, it's a tool to manage it. That means seeing your future clearly, understanding trade-offs before they're forced on you, and being able to answer homeowner questions with confidence instead of uncertainty. That's exactly what Solume is designed to help with. If you're a board member, book a demo and see what your community's 5 to 10 year outlook actually looks like. Not hypothetically, but using your real data. If you're a property manager, this is how you show boards that you're proactive instead of reactive. Solume gives you a competitive edge. You can't manage what you can't see. And once you see it, everything changes. What matters is this: boards that ask better questions earlier make better decisions. I encourage you to reach out and book a 15-minute call by contacting us at solume.com. If this was helpful, like this video and subscribe. This channel is here to help board members and property managers learn how to manage their communities responsibly, ask the right questions, and avoid preventable mistakes.